All right, before we get started, make sure you go head over to www.myvelocitybanking.com where you can sign up for a free account, put in all your mortgage or loan payment, and get a chart or a graph as to what to pay, when to pay it, so you could beat their banks at their own game by reducing the amount of interest that you pay using the velocity banking method. All right, so first of all, there's two things we need to remember. Banks are not our friends. Now, this isn't like an anti-banking video. I mean, banks are in the business of making money. And because they're in the business of making money, they can't be your friend. Like, they're not here for your best interest. They're in for their best interest. And again, it's not an anti-banking video. It's just the truth. They're in business to make money. Therefore, number two cannot coincide with number one. Next thing is that banks have been around for a long time, right? Like, they have been doing this for longer than you have been, and they've been doing this every day for lots and lots of years. So they know their game inside out. You can't beat them. You'll never be able to beat them at their own game. So what we do instead is that we switch the game up. We change it a bit. We do a little tweak to it, so we can win the game. And this is by using the velocity banking method. All right, so let's get right into it. How do banks make money? Well, really, it's just simply the banks make money by lending your money to other people at a higher interest rate. That's really all the banks do. So let's take an example. So let's say that you have, $300 in your savings account, and your next door neighbor, they've got, I don't know, $500, say, and your other neighbor, $200. So that's a total of $1,000. Now here's the thing why you'll never beat the banks. So almost all countries work on this principle of what's called fractional reserve banking. So this just means that the banks only have to keep a fraction of the money that they have on hand in their ledgers, and they could loan up to 10 times that amount of money out to other people. Now in the United States, they only have to keep 10%. In countries like Canada, they don't have to keep anything. They can loan out the whole money out. And so because of this, they have access to more money. Now you'll always get, and that's why you see commercials for banking always trying to get you to, increase your savings and all this other stuff, because the more money that you save, the more money that they can lend out and pay you minimal interest while they're, reloaning your money out. So let's take an example. Let's meet Jim. He's a banker. He's a loan officer at a bank. And let's meet Sally. So Sally wants to buy a house. She's been dreaming of buying a house. And so she goes to Jim. She goes, listen, Jim, I'd like to get a mortgage, to buy this house. So Jim does his paperwork. He goes, no problem. You're approved. 200 grand for your house at 5% interest. Great. Here's the problem. That $200,000 mortgage over 25 years, amortized over 25 years, Sally's going to end up paying over $150,000 in interest. So not only does she pay off her house, she pays off almost like two houses. And the bank does the exact same thing over again. And the other person comes in, they do the exact same thing. And that's how they make money. Now, to learn more about how you can pay off your mortgage faster and keep that interest money in your pocket and not hand it off to the bank, check out the site, myvelocitybanking.com, and sign up for a free account. Put in all your loan payments, and you'll get a chart as to what to pay off, when to pay it off, just to save interest. And don't forget to like and subscribe to this channel, because we're going to be showing you how to save money and how to beat the banks at their own game.